Every year, millions of people walk into a bank with a good credit score. They've done everything they were told to do. They paid on time. They kept their balances low. They didn't open too many accounts. And they still lose. Not because they broke the rules, because they didn't know which game they were playing. Here's what nobody tells you. The bank isn't playing the same game you are. You're playing checkers. Move forward. Don't get jumped. Win if you can. The bank is playing chess. It's thinking 5 moves ahead. It's reading patterns you don't even know you're creating. And it's making decisions about you right now based on moves you made 2 years ago. Today, I'm going to show you how the bank thinks. And once you see it, you can never unsee it. Let me ask you something. When you think about your credit score, what number comes to mind? 750? 780? Maybe you're proud of it. Maybe you've worked hard to get there. Now let me tell you what a mortgage underwriter sees when they look at that same number. A starting point. That's it. That's all your score is to them. A starting point for a much deeper investigation. Because here's the thing about checkers players. They optimize for the number. They do exactly what the internet tells them to do. Keep utilization low. Pay on time. Don't apply for too much credit at once. And those things matter. I'm not saying they don't. But checkers players stop there. They hit 750. And they think the game is over. It's not over. It's just beginning. The bank's real evaluation starts after the score. It goes into your file. It reads your history. It looks at the story your behavior tells, not just the headline number at the top. And most people have never been told this, because the financial industry has a very strong incentive to keep the conversation at the surface level, keep people focused on the number, keep people buying credit monitoring apps, keep people optimizing for a metric that only tells half the story. The other half, the half that actually determines whether you get approved, that's what chess players understand. And that's what we're going to decode today. Let me describe the checkers player. You probably know this person. You might even be this person right now, and that's okay. Most people start here. The checkers player has a 740 credit score, maybe 760. They check it every month on their credit monitoring app. When it goes up, they feel good. When it dips by a few points, they panic. They've read the articles. They know the rules. Keep your credit card balances below 30%. Pay everything on time. Don't close old accounts. Don't apply for new credit before a big purchase. They follow these rules faithfully. And when they apply for a mortgage, they're confident they've done everything right. Then the lender says no. Or worse, the lender says yes, but at a rate that's 0.5% higher than they expected, which, over 30 years, is tens of thousands of dollars more than they should be paying. Why does this happen? Because the checkers player is optimizing for the surface. They're managing the number, but they're not managing the story. In checkers, every piece moves the same way. Every decision is independent. You win by following the rules and not making mistakes. In chess, every piece has a different role. Every move has consequences several turns later. You win by understanding the entire board and anticipating how your opponent reads it. The bank is your opponent, and it's reading your entire board, not just your score, your whole file, your patterns, your history, the story that your behavior tells over time. The checkers player doesn't know this story exists. The chess player builds it deliberately. So what does the chess player look like? The chess player might have a 720 score, lower than the checkers player, and they get approved at a better rate because the chess player understands something fundamental about how lenders think. Lenders are not in the business of rewarding good scores. They're in the business of managing risk. And risk isn't measured by a number. Risk is measured by a pattern. The chess player knows this. So instead of optimizing for a score, they optimize for a story. Their credit utilization hasn't spiked in 2 years. Every month. Consistent. 8 to 12%. No dramatic swings before applying. No sudden payoffs that look like last-minute cleaning. Their file has depth, not just credit cards, an installment account, a credit builder loan, maybe a car loan from a few years ago. Different types of institutions have trusted them with different types of credit, and they've handled all of it responsibly. Their oldest accounts are active, not sitting quietly collecting age. Active, small recurring charges, paid in full, every month, automatically. None of these things happen by accident. The chess player built this story deliberately. 18 months ago, 24 months ago, they were already thinking about this mortgage. Before they ever walked into the lender's office, the checkers player reacts. They fix problems when they appear. The chess player anticipates. They build the position before the game begins. And lenders know the difference. They see it in the file every single time. Now let's talk about the 3 moves that separate chess players from checkers players. These aren't complicated, but they require something most people aren't willing to do. They require patience. Move 1. Stop managing your score. Start managing your story. Every time you make a financial decision, a purchase, a payment, a new account, ask yourself one question. Not, how does this affect my score? Ask, what does this tell a lender about my behavior? Did you pay off 3 credit cards right before applying? A lender sees that as perception management, not real behavior change. Did you open a new card 6 months before your mortgage application? A lender asks, why did you need more credit right now? Did your utilization spike in December every year? A lender sees a pattern of holiday financial stress. Every move you make is a message. Chess players know what message they're sending. Move 2. Build your file, not just your score. The chess player's file has 3 things that a checkers player's file often lacks. First, utilization consistency, not just a low rate, a flat, boring, predictable pattern over at least 12 months. Second, file depth, at least 3 active trade lines, at least 1 installment account alongside your credit cards. If your file is thin, a credit builder loan is the most efficient tool available. It costs almost nothing, reports to all 3 bureaus, and adds the installment diversity that mortgage underwriters specifically look for. I'll link the one I recommend in the description. It's the same one I'd tell a close friend to use. Third, recency. Your oldest accounts need to be active, not just old. Active. 1 small automatic charge, paid in full every month. 10 minutes to set up. Works silently from that point forward. Move 3. Think in timelines, not snapshots. The checkers player thinks in snapshots. What does my score look like today? What can I do this month to improve it? The chess player thinks in timelines. What does my file look like over the next 18 months? What story am I building right now? If you're planning to apply for a mortgage in 2 years, your preparation starts today, not 6 months from now. Today. Because the file that lenders will evaluate in 2 years is being written right now. Every month that passes without consistent, deliberate behavior is a month you can't get back. The chess player starts building the position before the game begins. You're watching this video. That means you've already made the first move. The credit system is not designed to be understood. It's designed to be navigated by people who know they're playing chess. Most people spend their entire financial lives playing checkers, reacting, fixing, hoping. The chess player builds, anticipates, controls. You now know the difference. If you want to start building your file the right way, the links to the credit monitoring tool and the credit builder loan I recommend are both in the description. Start with your file, see what story it's already telling about you, and if this video changed the way you see the system, subscribe to Credit Clarity. Every week, we decode one more move that the bank never advertises. I'll see you in the next one.